You open the mailbox and see it, an envelope from the IRS. Maybe it says you owe $8,000, maybe $25,000, maybe much more. Your first reaction may be fear. How am I going to pay this? What happens if I can't? Will the IRS take my paycheck or my bank account? Here's what I want you to know. An IRS tax debt is a problem, but it is also a problem with the process. The worst thing you can do is ignore it. The best thing you can do is understand exactly where you stand, become compliant, evaluate the resolution options available to you, and develop a plan. Over the next 10 minutes, I'm going to show you how. Before discussing payment plans or settlements, answer the most basic question. What do you actually owe the IRS? Don't rely on memory or an old IRS notice. Determine which tax years have balances, whether all required returns have been filed, and how much tax, penalty, and interest are currently owed. Review your IRS account information and compare it with the notices and tax returns you have. And don't automatically assume the IRS balance is correct. If something appears wrong, investigate it. You cannot build the right resolution strategy until you know exactly what problem you are trying to solve. Next comes one of the most important concepts in tax resolution. Compliance comes before resolution. Generally, if required tax returns haven't been filed, resolving the debt becomes much more difficult. And if you're currently required to make estimated tax payments or payroll tax deposits, those obligations need attention too. Think of compliance as the entrance to the resolution process. File the returns that need to be filed. Address current year obligations. Stop creating new tax debt. But remember, IRS compliance isn't the finish line. It's the starting line for resolving IRS debt. Now ask an important question. Why do you owe the money? Was too little withheld from your paycheck? Did self-employment income create a tax bill you weren't prepared for? Did your business fall behind on payroll taxes? Was there an audit or adjustment? Or has the debt simply accumulated over several years? Understanding the cause matters because a successful resolution should do two things: resolve yesterday's tax problem and prevent tomorrow's. Otherwise, you can negotiate a solution to the old debt while creating a brand new one. Now we get to the heart of many IRS collection decisions, your financial situation. Start gathering documentation showing your income, expenses, assets, liabilities, and available cash that can include pay stubs, bank statements, mortgage or rent information, vehicle expenses, insurance, medical costs, investment accounts, retirement accounts, and information about real estate or other assets. If you own a business, additional financial records may be needed. Why does this matter? Because the best resolution isn't determined by how much you owe alone. It's determined by the relationship between what you owe and what you can reasonably pay. Next, calculate your monthly cash flow. Start with household income. Then identify necessary monthly living expenses. The difference helps show how much may be available each month toward the tax debt. But there's an important distinction here. Your personal budget and the IRS's analysis of your ability to pay may not always be identical. Depending on the resolution being considered, the IRS may evaluate certain expenses using its collection financial standards and applicable rules. So don't simply ask, how much can I afford to send the IRS? Ask, how might the IRS evaluate my financial condition? That distinction can materially affect your resolution strategy. Monthly cash flow is only part of the picture. You also need to examine your assets. Do you have equity in your home? Money in savings? Investments? Vehicles? Business assets? Retirement accounts? For certain resolution alternatives, particularly an offer in compromise, the IRS may consider both future ability to pay and the realizable value of assets under applicable rules. This is why two taxpayers who owe exactly the same amount can have very different resolution options. One may have little income and few assets. Another may have limited monthly cash flow, but substantial equity or investments. The debt may be the same. The solution may not be. Now you can begin comparing potential IRS resolution options. If you can pay the balance immediately, full payment may minimize additional interest and penalties. If you need time, an installment agreement may allow you to make monthly payments. If paying would create significant financial hardship, the IRS may determine that an account qualifies for currently not collectible status, which generally pauses active collection while the underlying debt remains. And some taxpayers may qualify for an offer in compromise, allowing eligible taxpayers to settle a tax liability for less than the full amount owed. There may also be situations involving penalty relief, disputes over the underlying liability, or other specialized remedies. The goal isn't to choose the option that sounds best, it's to identify the option your facts actually support. Let's address one of the biggest misconceptions in tax resolution. You've probably heard advertisements suggesting you can settle a large IRS debt for pennies on the dollar. An offer in compromise is real, but it isn't simply a discount because you owe a lot of money. Eligibility depends on IRS rules and your specific circumstances. For many cases based on inability to fully pay, the IRS evaluates financial information such as income, expenses, assets, and future collection potential. So before pursuing an offer, analyze the numbers. A strong tax resolution strategy is built on qualification, not advertising promises. There's another factor taxpayers often overlook: time. Federal tax debts generally have a collection period, but calculating the actual collection deadline can become complicated. Certain events can suspend or extend the collection period. That means the age of the debt can matter when evaluating whether to pay immediately, establish an installment agreement, pursue an offer in compromise, or consider another collection alternative. Don't make major decisions based on an estimated expiration date. Verify the relevant IRS account information and determine how the rules apply to your specific circumstances. At this point, step back and compare the alternatives. Ask, how quickly will this resolve the debt? What will I pay each month? What could I pay in total? How does the IRS view my assets? Could my financial circumstances change? And what happens if I choose one strategy instead of another? A $300 monthly payment may sound affordable, but affordability isn't the only consideration. The real question is, does this strategy produce the best reasonable outcome based on the taxpayer's facts and the options available? That's tax resolution planning. Once you've selected the appropriate resolution strategy, the job isn't over. Submit the required forms and documentation carefully. Respond to IRS requests by the applicable deadlines. Keep copies of everything. Document important conversations. And most importantly, stay compliant going forward. A resolution can become much more difficult if new tax liabilities continue appearing. Think of this stage as protecting the solution you've worked to create. IRS debt can feel overwhelming when all you see is the balance. But resolution begins when you stop looking at the debt as one enormous problem and start breaking it into individual decisions. Identify the debt, get compliant, understand what caused it, analyze income, expenses, and assets, compare the available resolution alternatives, then execute the strategy and remain compliant. Remember, IRS compliance isn't the finish line, it's the starting line for resolving IRS debt. You don't need to begin with all the answers. You need to begin with the right information and a plan. If you've received an IRS notice, if you're worried about wage garnishments, bank levies, or growing penalties, or if you simply want to understand your options before making a decision, let TaxPro Easy become your guide on the side. Start with a free tax debt analysis and discover where you stand, what options may be available, and the next steps toward resolving your IRS situation. Visit us today at www.taxproeasy.com/IRS-notices to begin your resolution journey. TaxPro Easy, guiding you through the IRS process one step at a time.